Well, hi, everybody. I'm Rick Edelman. Thanks so much for joining us today for what is going to be a really fascinating conversation. Talk about state of the art, the latest and greatest in the world of crypto. That's what we're going to be covering here today for you. How you can use Bitcoin in your income generating strategies. I bet you didn't even know there was such a thing as an income generating strategy for Bitcoin, did you? And to help us understand the availability of new investment opportunities here, I'm happy to bring on to this podcast Garrett Payola, who is the co-founder and managing partner of Neos Investments, and his colleague, Troy Cates, his fellow co-founder and managing partner at Neos. Gentlemen, great to have you both with us here today.
Hey, Rick, thanks for having us today.
Thanks for
So,
having us, Rick.
so you guys have been involved in this, in the wealth management field for a really very long time. You've got decades of experience, each of you. But tell us how the two of you connected and what motivated you to form Neos.
Yeah, so Troy and I have actually been working together for the better part of 18 years. I have spent my entire career working with Troy. He started in the business a little earlier than I did. We started working on the institutional sell side, working with large hedge funds, mutual funds, pension companies, working on option-based strategies and different portfolio structures. And we really transported that into the asset management field. And we were some of the earliest pioneers bringing out option-based ETFs back in 2013. So a very wide growing space. More today is something that Troy and I have really focused on working, together, and our team that we've assembled is the same thing. So all long-term 20, 25-year plus, veterans in the industry.
That's awesome. And let's face it, Neos is not a household name in the world of asset management. So give us a couple of minutes telling everybody about the company.
Yeah, sure. So Neos, we're a global asset manager, and we utilize quantitative approaches to deliver yield enhancing and risk mitigated investment solutions. So we're really looking to enhance your traditional or emerging asset classes, like we're talking today about Bitcoin in the crypto field. But our team has decades of years of managing these types of products and strategies. But we focus on a data-driven approach, and that you're going to hear from us either systematic, quantitative. We really like research and we like quantitative approaches as ways to deliver a consistent outcome within our investment capabilities. We manage a little over $6 billion as of today. There's just about 25 professionals within the organization. We're here in Westport, Connecticut, and just happy for the opportunity today.
Well, I'm excited to have you both here, and this is because there's something going on in the world of Bitcoin and crypto broadly that is not getting a lot of attention yet, which is why I really wanted us to put this event together. And to understand that and to help people frame this, I think it would make sense to take a step back at the development of the and launch of the Bitcoin spot ETFs 14 months ago, back in January of 24, because it was those products, right, that created the opportunity for you to build the investment products you're now offering, right? If it wasn't for the availability of Bitcoin via ETFs and the incredible amount of assets, 100 billion, or so that they're holding, the option strategies that are now beginning to make their way into the marketplace wouldn't be able to exist, would they?
Well, initially there was the Bitcoin futures ETF that
Hmm.
was out there. But yes, when these ETPs came out, just about 14 months ago, it really opened up the marketplace for products like ours. As you'll see in our holdings, we hold one of them in a small position in the portfolio to get exposure to that, and then we do the rest synthetically through options. But yes, as those ETPs came out, and as we saw those massive inflows over the past year or so, the option market has really grown tremendously in the space.
And that fact is what has allowed you to create your offerings that are enabling investors to do things with Bitcoin they could never do before. Hence the title of this event, using Bitcoin in income generating strategies. I mean, historically, Bitcoin has always been thought of exclusively as a growth vehicle. You buy it because you think the price will go up, but to use it for income generation, that's counterintuitive. I don't think that's instinctive for a lot of folks, and that's what we're going to tackle here today and show you all how to do this. But I want to go back a little bit again to the fundamentals for those watching us here today, Troy and Garrett, who may not be terribly familiar with all of this. So start at the beginning here. How does option trading on Bitcoin work?
Sure. So it really looks a lot like your traditional investments. So if you're looking at option trading on the S&P 500, we here focus a lot on index options. And so we use the Bitcoin SIBO index options that are made available. And so it's giving you exposure to spot Bitcoin with an option that's essentially saying you're going to be willing to either pay somebody for something now for an outcome in the future, or you're willing to get paid in order to give somebody something delivered in the future. And for us, with this type of product, right, we're trying to generate income. So we're looking to sell that option, right, being a Bitcoin spot index call option that allows us to generate income within Bitcoin, just like you would if you were doing the S&P 500 or NASDAQ 100 in your traditional account and asset allocation.
And what kind of options contracts are available within this category?
Sure. So if you think about it, as Garrett mentioned, there's the SIBO Bitcoin US ETF index, and there's options that trade on that. So back to your original point, the 12 or so ETPs that came out about a year ago, that's what's this index is based on. So because of those ETPs that came out 14 months ago, SIBO was able to put together an index and then have options trade on that index. Of course, there are options trading on some of the ETPs that are out there, whether it be IBIT or others, but really this index is based on those ETPs. And the nice part about it is because there are these index options, they're listed and can trade just like Garrett said, just like an S&P 500 index option. So it's very easy to transact. There's liquidity out there, and a lot of market makers are making markets in these.
So you're really solving a couple of problems that have, I'll say, annoyed a lot of financial advisors as they look at Bitcoin, often skeptically. One has historically, of course, been the fact that Bitcoin is incredibly volatile. It has price movements that are not for the faint of heart. There have been, what, 7 times so far that Bitcoin has fallen in value 70% or more along its way to being the best performing asset class in history. Those 70% drawdowns have been far exceeded by thousands of percent, tens of thousands, I think ultimately millions of percentage increases in price. But it's volatility that a lot of folks don't like, and that's been a cause for some people to sit on the sidelines. And the other has been strictly that Bitcoin is a price appreciation model. It hasn't generated income. And nor was there any leverage opportunity, that you really weren't able to take advantage of the leverage capabilities that exist elsewhere in the equities marketplaces. So now we have the options trading that's available. And you're arguing that, hey, this is creating brand new opportunities in all three of those. We can create downside protection, we can create income opportunities, and we can provide leverage. So talk about each one of those three and how you're cracking that nut.
Yeah, sure. So for us, we're really focusing on the income piece, not taking quite the leverage, but there's an element of downside protection. And so when you think about a covered call strategy as a whole, the idea is that you want to get exposure to the underlying asset. And so in this case, spot Bitcoin. And then we're going to leverage that volatility, Rick, that you're mentioning. So I think a way to put in perspective for the audience today is if you're looking at the S&P volatility, you're going to look at the VIX. That's going to be at right a little over 17 right now. So at a volatility level of 17, that's what you're traditionally almost on an average basis going to see in the S&P. On Bitcoin, it's 60, right? So we see just even over the last 1 or 2 trailing years, when it's gotten a little bit more institutionalized, you're seeing volatility at 60, right? So 5 to 6 times the amount of what you're getting in the S&P. And so what we want to do is give exposure, right, to that asset class, to Bitcoin, but we want to be able to harness that volatility as a means to derive income, right? And so the way we're deriving that income is by selling those Bitcoin call options that Troy was mentioning earlier, and that allows us to get paid. And so when we think about that, because of the volatility being so high, you're able to write options on just a portion of your portfolio and also ones that are not close to where the current spot price of Bitcoin is. And so that you can preserve upside appreciation in what is very much known as a growth allocation, but use the fact that those price swings are so great to derive that income by selling call options against it. And so that allows us the income generation and utilizing that income also as a means of downside protection. So in our product that we're going to talk about today, we're not buying downside hedging in it, but it's that income generation and taking advantage of volatility that can means to a buffer, right, to some of those drawdown events that you had just mentioned.
So you're having your cake while eating it too. You're not trying to do it, but you're getting it anyway.
Right.
By the way, for all of you watching, you're more than welcome. You have the opportunity to post your own questions here. Many of you already did when you registered for this event, and we will be peppering Garrett and Troy with your questions as we go on. If they say something during this conversation that sparks your curiosity, just go into the Q&A box here on Zoom. I'll be taking a look at that as we go on, and fielding those questions as well. So feel free to join the conversation. So talk about specifically, we're going to get into all this detail pretty closely, but talk about specifically the product you're referring to. What is it you've invented? How does it work? So give us the basics of the product, and then we'll delve more into the strategy on how that product is being used.
Sure. So for this one, the ticker is BTCI. This is the Neos Bitcoin High Income ETF. And what we're doing here is we're having some long exposure to Bitcoin, and then we are writing calls systematically through our rules-based strategy on a monthly basis to bring in income and pay that out on a monthly basis. So how do we do that? How are we getting long Bitcoin? One way is we own up to a 25% position of one of the ETPs that are out there in the marketplace. We can only own up to 25% within an ETF structure. So to get that other 75% long exposure, we're basically building an option strategy to get a synthetic long versus that index that we keep discussing, the SIBO ETF index. And in that scenario, we're basically buying a call, selling a put with the same strike and same expiration to get a 1 delta position. So as Bitcoin moves up 1%, that position should move up 1%. And then on a monthly basis, we're rolling a short laddered covered call portfolio, which again is bringing in that income that we pay out on a monthly basis. Now, the nice part about what we're doing in our strategy, as Garrett was alluding to before, was we're looking at a number of factors when we roll this option portfolio on a monthly basis. We're looking at the volatility of Bitcoin, which Garrett walked through, and a few other factors that decides not only how far out of the money those calls are, but also on how much of the notional we're covering. Because the idea is we still want this to appreciate with Bitcoin. You might not capture all of the upside in these big swings, maybe like we saw right after the election a few months ago, but you're going to capture a good portion of that upside. And so for us, to give you an example, when we rolled last month, we sold calls anywhere from 15 to 25% out of the money from where current spot was. And we only had to write on about 50% of the notional to get that target income that we're looking for. And the target income for this product is anywhere from 25 to 30% annualized distributions. So a very high distribution when you think about it compared to some of the other products out there, and also capturing a lot of that upside. So since inception, while it's a short inception, we've captured almost 3/4 of the upside of Bitcoin while still distributing a nice income on a monthly basis.
And it has been a relatively short period, so talk about your confidence level that this is representative of what you're hoping to generate in the future.
Sure. So as we think about it, when we're going through this, whether it's this product or any of our products, we do everything in-house. So we research the option strategy, the underlying for months, thinking about what option strategy will make sense with the pairing of the underlying reference or asset. And when we were going through this for Bitcoin, we had a lot of time to think about it just because of those ETPs getting out. The staff had kind of prolonged getting any new products out in the Bitcoin space. And so for us, we kept going back to what are we trying to accomplish with this product? And the idea is, how can we have a product that captures a good portion? And for us, that's anywhere from 2/3 to 3/4 of the upside of Bitcoin while still providing that income on a monthly basis. So we wanted to make sure that a number of our factors inside that model, those levers move on a monthly basis, whether you're covering 50% or 60% of the notional or writing 15% or 25% out of the money on a monthly basis, those can change. So if volatility starts to decrease in Bitcoin, which we don't really see anytime soon, but if it starts to come in, there's still plenty of room to move those levers around within our model to say we're still targeting this income range.
So talk about the volatility. Does higher levels of volatility affect the type of call writing strategies that you use?
It does. So volatility affects all of our strategies. Here at Neos, we actually have call writing strategies, we have put writing strategies. Really depends on what the underlying asset is. And so in this case, Bitcoin, and let's stick with the cover call structure, as volatility, or let's say as Bitcoin moves higher, so the price moves higher, volatility should become lower. And so the inverse happens. Bitcoin sells off. Volatility is indicated that it's going to be higher because the price is lower. Our strategies adjust dynamically on a monthly basis, looking at those levels of volatility, how fast volatility is changing. And so I think in a simple form to explain it, as you start to see the price of Bitcoin appreciate, when we go to roll our options, we might be writing our options, although still for Bitcoin, far out of the money, but closer than we would if it was during a high volatility time. So as Bitcoin goes up, we write our options a little closer. We also might write our options on a little bit more of the portfolio because we want to generate the income first, followed by, the appreciation second. If you get an event where Bitcoin sells off, volatility is higher, we actually want to write our options further out of the money away from where spot Bitcoin is and on less of the portfolio because that allows us to protect the upside. And so if you get a reversion back to the mean where you've already had that sell off, that event, Bitcoin gets a bounce, we want to be able to participate with that. And so if you think about it as volatility ebbs and flows lower and higher, right, which is the inverse correlation to Bitcoin, we're going to readjust our options so that we're either protecting more of the portfolio after it's run, or we're going to leave more upside once an event has happened in order to make sure we try to protect as much of the upside capture as we can.
And that all kind of argues, Garrett, doesn't it, that the makeup of the portfolio could be pretty different from 1 month to, 6 months from now, based on what's going on with the price of Bitcoin in the marketplace. The ratio of the or not ratio, but the types of options that you're buying could be really different in 6 months than today because the marketplace is different, no?
So I would say it's more how much upside, right, or of an overlay you have in there. And so we'll always be selling the Bitcoin index call options. We
Hmm.
won't transition to being long or having exposure to a completely different option strategy. But you're right, it could look that in 1 month, maybe 75% of the portfolio is covered in options because volatility is really low and Bitcoin has run significantly. And so the most likelihood is it's really extended on a chart and you got a better probability that it has a short-term sell-off. So we could
Hmm.
write on more of the portfolio and
Right.
have those options be a little closer. And the same thing on the inverse. Market really sells off and Bitcoin's down, then yeah, we want to make sure that we have the ability to have the upside capture.
So one of our attendees has asked the question relative to that. It doesn't seem that you care, do you, if your Bitcoin positions get called away?
So technically, they can't be called away because we're using index options. So everything is cash settled. So that's the nice part about using those index options. Because they're cash settled, we just have to cover the cash difference when we roll those at the end of the month.
Got it. You made a reference, Garrett, a moment ago about the risk and reward. So talk about that. If we looked at somebody who simply owned Bitcoin, we know at the end of a calendar year what their gain or loss was for the year. Um, we also know how much risk they took to get that gain that they enjoyed in terms of the volatility they experienced throughout that year. Compare all of that to the call writing strategy that you're creating. Are you trying to match the total return of your ETF to that of Bitcoin, or are you trying to provide a risk adjusted return compared to Bitcoin?
Yeah, so it's really more the risk adjusted return, Rick. Like we're looking at taking an asset class that people want to have exposure to and finding ways to harness an income opportunity. If they're really bullish on Bitcoin and they just think it's going to go to the moon really quickly, then you're just going to be long Bitcoin, right? Then the income part of the strategy is not for you. What we've run into a lot is advisors and just individual investors are looking to get into Bitcoin, but they might be a little later. They might think they missed the run from, now 20,000 to 80,000, or when it was at 100, that it might be, it ran too much. And so they want to take an exposure to it, but they want to downshift their risk a little bit. And a way to do that is with this type of product is that income generation does two things. If Bitcoin trades sideways, right, it pays you a nice distribution. If Bitcoin's moving lower, it's going to help you as a means of downside, protection as opposed to just being long spot Bitcoin. Where they underperform is right in those really huge short-term months when Bitcoin goes on a big bull run. But the idea is that we wanted to give a lower volatility profile, but giving you exposure to Bitcoin. So it's more on that risk-adjusted return than it is going to be on just capturing 100% of the upside.
And you mentioned that you're trying to capture or have to date captured a 25 or 30% distribution rate um, so far. Do you think that that is pretty much the range you're going to find this fund producing?
Yeah, I think that's the range that we see as long as volatility stays in this range. As Garrett mentioned, if volatility starts to really come in over time, as Bitcoin is maybe more widely adopted and more people are using it, if we see that volatility come in, yes, that range can come in a little. But again, we still have those different levers within the model to hit that target range, and thinking about how we're only 50% covered and we're still writing calls deep out of the money on a monthly basis. There's still a lot of room for the model to move around to hit that range.
So what would you speculate would be the extremes? If you have recently experienced 25, 30% distributions or a rate of distributions, what would you say the lowest might be, the highest might be from a reasonable expectation?
Sure. I mean, from what we've seen in our testing, there were periods where it could go, in the low 20 range, but there's times when it's above 30. So for us, that 25 to 30 is really the target. And yes, as volatility moves around, and of course, as Bitcoin moves around and is more widely accepted, and who knows what happens next year or the year after with the actual coin. I think we think this range is a good target range for now, given how the market is accepting and how the market is trading Bitcoin.
So that's, kind of fascinating as people will, naturally, when you mention income generation, people are naturally going to be thinking of the alternative, more commonly used income generating vehicles, which means treasuries, corporate bonds, and those are all in the single digits. And so here we come upon an opportunity to get 4 or 5 times as much in income generation, which is certainly, eyebrow raising and noteworthy. Talk about the taxation of this. What are the tax implications of that income?
Yeah, so right now, Bitcoin does fall into the ordinary income or short-term capital gains. So one thing we really focus on here is trying to derive the highest level of tax efficient income we can across each asset class and product. And so with more traditional equity products that we have, there's a very high degree of taxation that we can arbitrage in the sense of reducing and mitigating from a net after tax perspective. For Bitcoin, we are still left in a structure currently, which I think is being discussed outside of obviously our firms and pay grade all the way up to the IRS, of how the crypto would be taxed from a option strategy and an income generation. And so the current index options don't get what's called a 1256 tax treatment, like a index option on the S&P 500 does. When you're looking at those, that tax structure means that 60% of all P&L gets taxed at a long-term capital gains rate and 40% at short-term. Right now, Bitcoin is still falling into the full short term. And so that's going to be more on an ordinary income rate. One element of our investment strategies that we have across all of our products is tax loss harvesting. And so very similar to what most advisors will do or investors at the end of the year, if for some reason you have a part of your portfolio that has generated some type of a loss, and you can take that loss and offset a gain that you're going to take from a realized position. We do that within all of our funds. And so one benefit to BTCI is that when you have those really short, hard Bitcoin runs, and let's just say Bitcoin was up 10% in a month. That may not be an extreme enough example, but let's just say we were up 7 versus the 10. That 3% difference is an opportunity for us to tax loss harvest, the option piece. And so although we didn't lose money on the entire fund, we didn't capture the full upside move because the options had a cap that were embedded within the strategy. But that 3% is technically a loss we can use in the fund. And that can get paired in the future with any distributable income. And that reclassifies your return from ordinary income into a deferred long-term capital gains treatment. And so there's benefits within BTCI in the way that we manage the fund in order to mitigate taxes from that income distribution. But as a whole, Bitcoin still falls more into the ordinary income than some of the longer, more traditional, allocations that have been out there, like the S&P 500.
So based on all that, and first of all, it sounds very impressive that you are paying a lot of attention to tax optimization, which fund companies, frankly, are notorious for ignoring. So kudos to you for that. Are you able to anticipate or speculate on what the net of all that's going to translate to for the ordinary investor at the end of a year? What percentage of those distributions are going to end up being subject to short-term tax rates as opposed to long-term?
We don't yet. It's hard to speculate because it's all derived based on the move of Bitcoin over the course of the year. We are coming up to our fiscal year end, which is May 31st for all of the funds. So we'll have a much better look in the next month or two, and would be happy to follow up on what those actual numbers ultimately are that we could talk to, because that'll be full from the accountants, Cohen and Company, who does a lot of our auditing and tax work with US Bank, and then we'll actually be able to. I think for an investor, though, assessing it, to give a more direct answer is worst case, assume that you're getting paid this high income, this 25 to 30%, and it'd be all ordinary. But hopefully it's going to get, transitioned somehow into maybe a 60-40, or there's going to be, of course, some level of return of capital type structure that we just talked about with the tax loss harvesting. But we won't know until we have actual numbers closer to the end of May.
Yeah, so the worst case scenario, it's 40%, and the best case scenario, it's 20%. You're going to fall somewhere in between. And just assume the worst case scenario. I think you can double check my math on this, but I think I'd rather earn 30% and pay 40% than earn 6% and pay 20%.
Yes, I think you're right on that.
So, it's taxes are what they are. And of course, the ultimate way we just make this whole conversation go away is to buy this inside of an IRA. Is that available?
Yes, that's definitely available. So we've seen people buying this fund, and like we talked about earlier, it's only been out for a few months, but we have had a nice amount of assets come in. But we've seen it across taxable and non-taxable accounts, and people putting it in their IRA and looking at the growth and either reinvesting it or using the proceeds to buy something else.
So let's talk about, we got a bunch of questions coming in. People are really asking about the logistics and experiences of this. So first off, one from myself, talk about the flows into the fund, because you mentioned that you are dealing with the options strategies on a monthly basis. What happens when somebody makes an investment, into your fund in the middle of the month? Talk about how those cash flows are treated, how you're incorporating that into your strategy, and so on.
Sure. So if you think about when we have flows come in an ETF structure, you have a market maker or an authorized participant. Basically, they're getting short the stock as people are coming in and buying it. So they're selling it out to the market. And when they get short a certain amount, they want to clean up their books and they do a creation unit. Our creation units are 10,000 shares. So if they are short 10,000 shares and they want to flatten their books for the day, they'll do one creation unit. That creation unit, 10,000 shares, comes over at the net asset value that day. And for us, since this is mostly an option portfolio, it comes over as cash. The other way it could come over is in kind, where they're delivering securities, but since everything's mainly an option, they're delivering cash. When that cash comes over, we're taking that cash here with our trading team and we're adding it to the positions we already have. So if you look at our holdings, which anybody could go on our website and look at our holdings on a nightly basis, which is one of the great things about an ETF. Everything's transparent. They could go and look at our holdings and say, hey, on this day, they had, today they look at it and they see all of our option positions. They see our ETP long position, a treasury in there for the cash position. And then the next day, maybe we have some flows come in that night. They'll see the same positions. They'll just be a little larger. So we add to those positions. And then on a monthly basis, we're rolling the short call portfolio. So if that grows over the month, we'll close that out and roll it to the next month. And then for the synthetic long, we usually roll that on a quarterly basis. So that long call and short put, we're rolling on a quarterly basis.
By the way, Garrett and Troy have put together with their team a really terrific deck of lots of great information. Michelle has just posted it for you. It's in the Q&A. It's in the chat box, I think, here on Zoom. So you can click that link and access that full doc. One of you guys want to tell real briefly what kind of content people will find in there?
Yeah, sure. So you're going to get an overview of talking about the taxation, and just how focusing on tax implications and mitigating taxes ultimately can help derive better compounded long-term results. There's going to be a little bit of overview about us in there, and then there's going to be an overview of the actual BTCI fund, what Troy and I were just walking through, how the fund is structured, fees, expense ratios, and all of those things. You can also go right to our website at neosfunds.com and /BTCI, or just go to neosfunds.com and click to the BTCI table. And that's going to bring up all this information that we've just spoken about.
Terrific. So that link is right there for you. And in fact, you just alluded to something where Ed's got a question on it about the expense ratio. So what is that?
Sure. The expense ratio is 98 basis points.
And Rail's asking, do you have a target price for Bitcoin by the end of the year? And does any particular target you have any impact on how you're managing the fund?
So we don't put out target prices for anything, whether it's Bitcoin or the S&P 500 or anything like that, because for us, we're really trying to provide income from that underlying reference asset. So like you said, it's not as important for us to know where Bitcoin's going or where it might go. As long as that volatility is there within within those options, we could still generate the income. And that doesn't change for us on a monthly basis. As Garrett had said earlier, everything is rules-based and systematic. So there's no discretion taken from us as portfolio managers on a daily or monthly basis.
But okay, that's fair enough. So let me tease you a little bit. Personally speaking, unrelated to your role as portfolio managers of this trading strategy, uh, is it your view that by the end of the year, Bitcoin's price will be higher, lower, or the same as today's?
I'll give mine first. I would say higher, right? We have obviously a very pro crypto administration that's come in, trying to put in much more of a pro crypto regulatory body as well. And so I think for all those reasons, there's just a lot of support and push behind institutionalizing and more access for all investors into crypto and Bitcoin. So I think it's higher, but that's my
Yeah.
personal view.
And for me personally, I think it's higher as well. It's one of my, Garrett and I own all 10 of our ETFs, but me personally, BTCI is one of my larger holdings. Just I like the income. I like having the exposure. So I think it'll be higher.
Terrific. One of our attendees is asking, under what scenarios would this fund perform poorly?
Sure. I think of poorly as the way you understand the product. And for us, when does this product not perform? Probably better than Bitcoin, right? And that's going to be in a very strong bullish Bitcoin environment. So if you are just long spot Bitcoin and you're expecting it's going to be up 30%, 40% in a month, we're not going to be able to capture all of that. We've given up some of that big move to the upside in order to generate the income. And so I think that is more the underperformance, in my opinion. Of course, if Bitcoin is lower, we will outperform spot Bitcoin just because we've generated the income. Some people might look at that as underperforming because it's not up. Of course, it's down with it. But if you're looking for Bitcoin exposure, when would I compare it to then spot Bitcoin? Is we won't outperform in those really strong bullish environments.
We have several questions pertaining to the income itself. Is it distributed on a monthly basis?
Yes, it's distributed monthly.
And it obviously fluctuates month to month.
Yes, it can fluctuate like we were talking about earlier with
Right.
volatility and also with the price movement of Bitcoin.
Right. But you're expecting or hoping that the minimum distribution would be around the 20% rate, give or take, could be higher, even over 30%, depending on what's going on. Is that fair to say?
Yeah, on an annualized basis, of course. Yep.
And that's the key point, on an annualized basis. So, talk about what you're observing in the marketplace. What percentage of your investors, if you have the data, are taking that distribution in cash versus reinvesting it? Do you have that data?
Oh, we don't have that data, but I'll try to give you just a thesis on the response is I would say half take the income, or it could be all are taking the income and half put a portion of it back in. Post our distribution on a monthly basis, we do see volumes up a little bit, meaning more of like a reinvestment, in the drip. But unfortunately, we don't have specific data on who takes it and who doesn't reinvest it.
Are you hearing from advisors as to what they're doing for their clients, what they're recommending to their clients in that regard?
Yeah, I think advisors, from what we've been hearing, a lot of them have been kind of split down the middle, as Garrett was saying, whether they're keeping the cash, it's all, of course, client dependent for them. But I think we've seen a larger pickup of advisors asking about BTCI on a call when they're calling about another one of our funds. And it's interesting because as we talked earlier, some of them had wanted nothing to do with Bitcoin at 10, 20, 30,000, got interested maybe at 50, but still hated it at 60. And now where it is now, they're like, my clients keep calling. They need to have some Bitcoin exposure, but maybe they want something with a little less volatility and they want to earn some income. And that's kind of where we fall into
Yeah.
it.
Got it. William is just, while we've been on this call, he has just checked out your fact sheet on the performance data, and he's asking if that assumes that the income is not reinvested.
So on the fact sheet, it's going to be a total return. That's going to take into account the price movement of the actual ETF plus distributions. And so that wouldn't count reinvesting the distribution back into the fund for a total return.
Got it. And Eric wants to know about the custodians. Is this available, pretty much everywhere? Schwab, Fidelity, Interactive, et cetera?
That's correct. Yes, we're available on all the major independent and like discount brokers from Robinhood to Tasty Trade, Schwab, Pershing, Fidelity. It gets a little different as you start to get up into the independent broker dealers and the wirehouses because each one has their own independent view on crypto. But all the major independent platforms, the product is available.
And the symbol again is BTCI, Bitcoin. I'm assuming the I stands for income.
That's correct.
Yep.
So pretty simple and easy. Talk about the from again from the degree to which the usage of this fund by individual investors directly, the DIYers versus the advisory community. What are you seeing in the marketplace?
So what we're seeing is a lot of people are, want exposure to Bitcoin. Some of them have been in Bitcoin for years and understand the risk, and maybe it's a large portion of their portfolio. And they're looking to see how they could possibly have some real income off it without selling that. So instead of adding to their current Bitcoin position, how do they start earning income off it? Others are just dabbling for the first time because everybody's been talking to them about crypto and Bitcoin, and they realize they need to, even if it's a small portion of their portfolio, have some asset, some allocation to it. And if they can earn a little income, even while it's, going sideways for a month or 2 months or whatever it may be, if it comes in a little, they're maybe outperform a little because they have that income coming in that gives them a little bit of a downside buffer. But I think we've seen it across the board, whether it's people that have been in crypto for a while or some that have just started to dip their toes into it.
And talk about the allocation itself. One of the big debates that's going on in the marketplace is how much Bitcoin. So what percentage of the portfolio should you place into this? What are you seeing investors doing and investment advisors recommending?
Yes, that's a really good question, Rick. I think one, it's getting larger. That I can certainly say. I would say on average between 1 to 5% is probably more the range when you're thinking of from an advisor standpoint. The direct investors that we hear from definitely willing to take more risk and putting those in as potential larger allocations in their own individual portfolios. But we're definitely hearing like a 1 to 5% allocation is they want exposure, they want the growth. This has a little bit of a belts and suspenders, around the risk when it's just being long Bitcoin versus us. But they also look at it as like a, an income enhancer. And so if they think about their entire broad portfolio and what that looks like from equities to fixed income and alternatives, this can get slotted in and is a means with such a high amount of distributable income that a 1%, right, a 2%, a 3% allocation just from an income standpoint can be meaningful to the entire portfolio distribution. And so it's really around the conversation of I'm gaining exposure to Bitcoin, get a little bit of a buffer built in, and then I can get paid to wait if it's trading sideways or give a little protection. But it's a real meaningful income allocation, for the entire broader portfolio.
One of the things that I find appealing about the fund is the fact that it isn't one of the original 9 spot ETFs, meaning as advisors are paying more and more attention to the space and they're responding more and more to their clients who are asking about this space, it's hard for an advisor to demonstrate value add if all they do is provide a spot Bitcoin ETF. I mean, that's kind of like an S&P 500 index fund. I can go pay 5 basis points and get it from Vanguard. What do I need you for? And you could kind of make that argument with the Bitcoin spot ETFs as well. Most of those investors, most of those clients have no idea of this options trading strategy that's available. They have no idea they can generate 20, 30% distribution rates from a Bitcoin-oriented investment. They are oblivious to this fact. And I think it's a heck of an opportunity for advisors to demonstrate to their clients, hey, I know something you don't know. Hey, I can give you an opportunity to gain that exposure in Bitcoin that can provide you, I'll use the word hedge, and you probably won't want to help deal with the volatility that exists, that exists in Bitcoin because of the advent of the income that is able to be generated. And I think it's an opportunity for an advisor to have a conversation with a client that they may not otherwise have. It's an opportunity for the advisor to demonstrate they know more than the client, an opportunity to provide value add to the client, and to further improve the client relationship. So I think that this is the kind of an investment that advisors really should be paying attention to add to their repertoire for client service, client coordination, client conversation.
Yeah, I totally agree on that, Rick. Like we found that in even some of our other products on like the cash side, can replace a money marker, something very simple with something that can enhance the yield. I think it's forward thinking on the advisor's part, right? It's finding a means to getting the client exposure for the advisor's sake too. It's also an opportunity to get the client to invest potentially new money or money away from like a Coinbase or something where they're not helping or knowing that that's part of their broader asset allocation or estate planning, and so to offer them something more unique and innovative, right, is a great opportunity to showcase, their thoughtfulness, the work that they do, right, the time that they're putting into managing, their clients' assets, and estate planning goals.
Let's tackle Gary's question. He notes that there are some competitors out there, some alternative products that are in the yield generating category of Bitcoin. Talk about how your ETF differs from what else is available in the marketplace.
Sure. I think there's definitely a lot of competition coming out in the space in general across option-based ETFs. And of course, as the Bitcoin ETPs came out last year, and now our product and others are coming into the space to offer a distribution off of the volatility of Bitcoin, there's definitely a few other competitors out there. I think when you're doing your homework, which is really important in this space in general, as you're diving into it, to give you apples to apples, just look at the total return of ours versus others, and then you could start to see the differences and really dive into what we're doing in our portfolio versus what some others might be doing in their portfolio. Again, Garrett and I have been doing this in the options world for decades. And so for us to be able to harness the volatility of Bitcoin and be able to bring a product out like this really just takes what we've been doing for a long time in other parts of the market and applies it to this space. So for us, this is what we live and breathe and what we do. And like we keep talking about, all these strategies are built on quantitative methods and methodology. So again, fall back to the total return, really dive in, compare BTCI versus those others that he's asking about, and you'll start to get an idea of what we're doing. And again, the ETF structure is a great thing. You can go on our website and see our holdings. You can go on theirs and understand their holdings. And you could really start to look at that on a daily basis and understand what we're doing.
And that's really the key, isn't it? You really need to engage in due diligence and do your research, because most advisors, let's face it, still don't know an awful lot about this category. They don't know a whole lot about crypto broadly. They don't know all that much about Bitcoin specifically. And I'll bet they aren't even aware of the existence of these options trading strategies as well. So it really does make a lot of sense to do this. And when they do, they begin to ask really interesting questions like Tom just did. He said, could the CTF be used as an alternative to fixed income? So what do you think about that?
So we've heard this a lot, not just on Bitcoin, but on all of our products. And I think it's just the way it's framed with the client and where it's put in the portfolio. So short answer is yes, they're income products. So if you're just looking for income more broadly speaking, whether that's fixed income or somewhere else, this is a great place to derive income because Bitcoin has a lot of volatility. However, that's the flip side. If you're comparing it to a fixed income investment that's traditionally a low risk, lower return, right? Obviously, make sure that the client understands, as we talked about in the beginning part of the segment, Bitcoin could be down 70% tomorrow. Your fixed income is most likely not going to do that. And it's almost mathematically impossible unless the Fed decides to come in here and hike rates, 30%. So I think definitely from a different risk bucket. But if you're looking at it as a income allocation and you're way overweight, maybe junk, high yield, something where you have concerns over, and you think that Bitcoin has a better opportunity over, a multi-year period to outperform, potentially fixed income and what the Fed's going to do, it's a great alternative, than to part of maybe an overweight allocation.
Yeah, I think there's a lot of validity to that. I mean, in the world of bonds, it's all about interest rates, right? And nobody's expecting interest rates to double or triple in the foreseeable future, which means the only thing you have left is credit quality. And that's why people turn to treasuries first, high grade corporates second. But nobody really buys a junk bond because of the potential for price appreciation. They're buying a junk bond because it's got a much higher yield, a much higher distribution rate. But that distribution rate is still only going to be a third or a half of what your distribution rate is going to be. And you have upside potential to a much greater degree than a junk bond does. So I think that you offer a pretty compelling argument for those who are trying to diversify the income resources, where we're generally limited to what? We've got treasuries, corporates, munis, junk bonds, maybe real estate as an income alternative, annuity products. They're all birds of a feather in terms of the total returns and the yields that they're generating. What you're offering is something truly different, a true portfolio diversifier. And to take some percentage of your fixed income allocation, you decide the percentage, 5%, 25%, and allocate it to something like this, that could be really additive in terms of the income you're going to get, as well as the diversification, which provides some insulation against the risks you're taking with the rest of the fixed income portfolio. To me, it seems to be kind of a no-brainer, no?
Yeah, I mean, when you think about it, it's really how much risk do you want to take for that income generation? That's what it boils down to. If you're younger, you have a longer time horizon and a longer outlook, and you're more into thinking about Bitcoin, what could be down the road, and you want to earn a higher amount of income, but still take that risk along the way. You're willing to take that risk because you know you have many more years of investing. Yeah, that's where people are starting to look at it and say, hey, if I could get this kind of income versus what maybe my parents did off of their fixed income portfolios, why wouldn't I take this risk now? I'm young enough. I have a long time horizon. And Bitcoin, we've seen it appreciate so much during the short time it's been out in the universe. What could happen over the next 5, 10, 20 years with it?
Ed is asking another question. If you're going to alter your treasury bond percentage allocation, or will it always stay pretty much at a predetermined level?
So so the treasury bonds basically they adjust. So you see that it looks like a large portion of our portfolio, but it's really used as collateral for that synthetic long for the Bitcoin position. So it'll move around a little as we have flows come in, but really it's all about using that as collateral for the options.
Charles is asking, given the life of the fund to date, do you have any MPT statistics as yet? You haven't, he's asking about standard deviation.
You do, but it's really short. So how relevant, is that if you're looking, kind of on Bloomberg and seeing Bloomberg's not even going to calculate standard deviation until it gets to a year. I mean, if you think about it in relation to our other products, in the more traditional, we're looking at kind of a third less volatility. So we would potentially look at this having a third less volatility than Bitcoin. But unfortunately, I don't have a public stat that's being calculated yet until it's got its first 1 year. But think about that income source as a means to lower the vol. We're going to expect that to be kind of about, two-thirds of what Bitcoin would be.
Yeah. And a couple of big picture questions. First, what's next for you guys? Do you have an Ethereum fund on the horizon, for example, that would do the same thing for Ethereum that you're doing for Bitcoin?
Nothing in registration yet, but yes, we're always researching and figuring out what makes sense. Could there be an Ethereum, covered call product or something like that? So it's something we're always researching and looking at, but we haven't put anything into registration. So no close plans for it yet.
So along those lines, talk about the history of this fund's creation. When did you start thinking about it? When did it occur to you that there's there's an opportunity here to create a product like this? Talk about that timeline.
Yeah. We started on this product, I would say we're going on at least 2 years.
Wow.
We worked on researching and developing it. Over a year and a half ago, we filed for it originally with the SEC, but we got stuck in the same purgatory that all the spot ETPs did. And it just sat there, couldn't get a response. Ultimately, once those ETPs got accepted, it changed everything. And when that happened, conversations picked up. Obviously, all the regulators reviewed the documents again, gave us any comments, small tweaks to that, and it finally was able to be launched, last October. But it took us a good year and a half sitting in registration to ultimately get the product out. And we had built it and started knowing we would develop a product in the space, for well over 2 years.
So you have been in meetings with the SEC, both during the Gensler uh, tenure as well as now as the Trump administration is getting it all sorted out. We still don't have the official SEC chair. We've got Mark is in the acting role for the moment. What are you seeing in terms of a sentiment change at the SEC? What do you view, then meaning pre-election to now post-election? What are you seeing that's different?
I think the little interaction we've had with the staff through lawyers and fund counsel, I think has really been previously, there was obviously, like Garrett said, we just sat there for a while with this product. We were still bringing out other products and other ETFs, and those were moving through the pipeline. And I think for this product, there was I think all Bitcoin products were going up all the way to the top at the time, and they had to be reviewed by everybody. And as Garrett said, once those ETPs came out in the market a little over a year ago, it kind of there was a shift, and then there was more conversation on, okay, we understand what you're trying to do, but how is this going to work? And we just had to go through a number of back and forth with the staff on getting them comfortable with our prospectus and understanding what we were trying to bring to the marketplace, and that this is what we do, whether it's equities, fixed income, and now crypto. We really wanted to get this out. So I think there was that shift a little over a year ago. And, going forward, we're hoping that it's, there's a better or easier path to getting products like this out.
I think we all share that hope and aspiration as well. One final question for you just came in from one of our attendees, and they say, I see on the fact sheet 33.28% distribution rate. On that basis, the question is, does that suggest that after 3 years, you're going to have 100% return of capital?
Yes. So I think the difference is comparing a 30-day SEC yield to our distribution rate. An SEC yield is a calculation that only takes into account either qualified dividend income or net investment income off of fixed income. So the fact that we're driving all of that income off of the options market that's defined as capital gains, right? So either short term or long term. And so the big difference of that 33% versus, let's say, a little bit over 3% on an SEC yield is because that's all the income being derived out of the options. And so that's the major difference, I think, of what they're asking. Of course, if we were able to convert the return of capital from a tax designation standpoint, so meaning the fund is up, but is distributing on a tax deferred basis, you would lower your basis over that period of time. But actually, what we know, and I think this is maybe where crypto's headed, but in the traditional side that I can certainly answer, if you've ever exhausted your basis down to zero from having a tax efficient distribution, all those future distributions are taxed at long-term capital gains. So it's all taken in a positive light, but I think it's really around SEC yield versus our actual distribution yield.
Got it. Terrific info. This has been really terrific conversation. I really want to say thanks to you, Garrett, and to you, Troy. I think this is going to generate a lot of conversation among advisors and a lot of interest and folks visiting your site to learn more about this. I want to also tell you we have another event coming up on April 8th, getting Bitcoin exposure beyond the spot ETFs. There's the QR code. You can check out that event and register right now to attend. We also have our big annual event, Vision, which will be June 9 to 11 in Dallas. We already have secured Catherine Molnar, who's the CIO of a significant pension plan, who has been allocating to crypto for years. She's going to tell you their rationale for that. Michael Greenwald, who is the head of digital assets for Amazon Web Services. What is Amazon doing with blockchains? You're going to hear all about that. And U.S. Senator Bernie Moreno, first time elected in a very big deal campaign this past November. We're going to have Senator Moreno with us, who prior to joining the Senate ran a very significant blockchain company. So we're going to be looking forward to his conversation. And if you haven't downloaded my latest white paper yet, please do so. The 6 mistaken beliefs that are keeping you from buying and recommending Bitcoin. The QR code for it is right there. You can also find it on our website at dacfp.com. And we also offer 2 ETF toolkits, one on the new spot Bitcoin and another one on the new spot Ethereum ETFs, white papers, infographics, videos, and a couple of really cool comparative charts so you can easily see how they compare to each other. And ultimately, if you really want to demonstrate to your clients that you have really maintained your knowledge and fluency in the latest in the world of personal finance, you need to get your CBDA and become certified in blockchain and digital assets. This is listed by FINRA in its database of professional designations. It's an online self-study course that will give you 18 CE credits. First half of the course, all about the tech. The second half, all about practice management, crypto taxation, crypto portfolio modeling, portfolio construction, the investment thesis, how to talk about this with clients and helping them understand all of it. All of that's available through our CBDA program. And finally, be sure to read my #1 Amazon bestseller, The Truth About Crypto. Gentlemen, I want to say thank you again for participating in this event with us today. Really terrific information, and I know folks really got a lot out of it. So Troy and Garrett, thank you so much.
Thanks, Rick. We appreciate it.
Thanks, everybody. See you at our next event.